Good afternoon, Natalia. I'm happy to see you again. How are you?
Good, Svetlana. How are you? Lovely to be here.
I'm good, thank you. It's our second interview with Natalia. The one was in Russian, so we have decided to record the second one in English so more people have a chance to get some answers to their questions concerning the financial situation in Australia.
That's great. Can't wait.
Let me introduce Natallia first. Natallia was born in Belarus. At the age of 21 years old, she moved to Australia, then studied at the Monash University, where she got the master's degree in finance. And for the last 10 years, she is managing the company True Wealth Advice in Melbourne. Can you please add some more details from your biography?
Yeah, sure. Look, I've been in Australia for over 20 years now, and I've always been in finance. I've started from doing really basic jobs like administration, and then I joined big organizations and just kind of climbed the corporate ladder. And then 10 years ago, I decided to bite the bullet and just get my own business. So it's been 10 years, yeah. So it's gone very fast, but I loved it. It's been a great journey.
That's great. So tell me, Natalia, please, what is a financial advisor?
A financial advisor is somebody who looks at a client's individual circumstances, their financial situation, and gives them recommendations how they can improve their financial situation, what they can do better. And it could be improving their superannuation performance, improving their insurance premiums, having a look at what they want to achieve in their life. For example, they'd like to retire earlier or go and travel overseas. So how can we actually save enough money, invest money, and get income from our investment portfolio or superannuation account to achieve our goals?
What are the services which are provided by your company?
Yeah, so we'll look at a client's holistic situation. So we'll look at what they've got in terms of their cash flow management, how they're managing, whether they've got any surplus at the end of the day, how they, if they're employed or self-employed, income coming in, money going out, whether they've got a surplus. We'll look at their finances. We'll look at their credit, for example, if they have any mortgages or home loans, if they've got an investment properties, how they actually manage from a credit point of view. We'll look at their superannuation, their insurances, and it's all about understanding what they can actually achieve better, what they can do better with their financial situation.
Okay, thank you. Let's start with the superannuation. How to choose the right super fund?
Yeah, there are so many different aspects to it. And I guess when we go and start our employment, we are offered employer superannuation fund. We've got an option of choosing your own superannuation, which is great. So we can go and have a variety of super funds to choose from. So when we decide, there are so many different, I guess, components to it. It's important to have a look at the type of superannuation fund. You probably have heard there are self-managed super funds available to invest in, which is when you are the trustee of the super fund and you decide how to invest money, or you can just outsource that and rely on someone else to do it for you. So you might be able to join an industry super fund or maybe a retail superannuation fund. So we're looking at obviously their performance, how they've performed over the last at least 3 years. We'll look at costs, how much they cost to invest in. And there are some other components. For example, currently we are so used to technology. We love being able to view our account holdings online at any time. So it's important to be able to actually log into your account and view your holdings, what you invest in. And also, some of our clients, for example, they prefer invest ethically. So they love investing in companies that they feel they can make a difference with. So if they invest in a portfolio of shares that is ethically designed, so they feel they make a difference in the world. So that's another important consideration. So just really trying to understand what those super funds actually invest in. And then finding the right, I suppose, advisor or a right person who can help you navigate, that could be really helpful as well.
In your opinion, is it important to save some more money monthly on top of those 10% which goes from your salary to the super funds in order to feel better financially when you retire?
Absolutely. When we invest in our superannuation fund, we obviously, what do? We take advantage of the compound interest. What it means that investing today help us to generate more return in the future. So because money that we make from our investments generate more money, and that's how it just grows over time. So when we think about how much money we need when we retire, it all depends on a lot of, again, different factors. But one of them is how much money we need to live on, let's say when we're age 65, when we retire. And from knowing roughly, let's just say it's 2/3 of your existing expenses, so we can then understand, and there are so many calculators available online, we can actually put the data in and really try to work it out ourselves. So if, for example, let's just say somebody needs $42,000 to live on annually in retirement in today's dollars. So, and if we are to retire at age 65, let's think that we don't have any other expenses to pay for at that time. So based on that number, we roughly need around $840,000 in our superannuation account. Again, there are a lot of different assumptions, but just as a kind of a general number to have in our super fund at that time. So we're comfortable and that money lasts us throughout our lives.
What is the maximum amount of money you get when you retire, and how does it work?
So when you have access to your superannuation money, and it is, you need to be obviously a preservation age when you can access money from super. From age 60, for example, it is completely fully tax-free. So there is no tax on the money that you take from your super. There is no maximum. If it is in the transition to retirement pension fund, it is still a maximum of 10%, but from age 60, there is really no maximum. You can take as much as you want, but remember, money that you take from super, and if you put it into your personal name, obviously it will be taxable at your marginal tax rate.
So what if you didn't work, or you've started working like at the age of 40 or 45 years old?
Superannuation, it is a tax vehicle for investments. You can obviously start putting money at any age, and the earlier the better. And again, because of that compound interest effect. So certainly you can make voluntary contributions, or they call them personal contributions. And there is a limit on how much you can put into super every year, but you can certainly contribute and ensure that obviously you still have that money working for you. Keep in mind that obviously money that is in the superannuation environment is taxed differently compared to your personal circumstances. So it's really important to understand obviously your tax situation as well. And yeah, the benefit is you will have a bit of a forced saving because you are actually, it's locked away, nobody touches it, you can't withdraw it at any time, and therefore it is working for you behind the scenes.
Choosing a life insurance, what do we need to look at?
Okay, there are 4 different types of life insurance. One is your life, which is if somebody passes away, their family will receive, or their beneficiaries will receive, a lump sum payment. And let's just say it's $500,000, and that will help them to provide for funeral expenses, to pay out some of their debt, if there is any debt, provide for any other expenses in the future. So that's your life cover. So then we've got your second type is your total and permanent disability cover. So if somebody becomes totally and permanently disabled and they are unable to work ever again, the insurance company will pay them a lump sum payment, again, similar, just say $500,000, and that will help them to pay for any medical expenses that they will have in the future due to their illness, or any home modifications if they need to have, for example, wheelchair access to their home, or any other expenses, again, maybe reducing their mortgage, paying it off, or providing for any other bill payments. So that's your lump sum. Then you've got your third type is your trauma or critical illness cover, which is again a lump sum payment paid to someone who, say, let's maybe has a cancer condition or stroke, heart attack. So there's a variety of different definitions and critical conditions that a person can have, and if they've got one of those conditions or two, they claim their policy and they get paid if they satisfy the payment. And then your last one is your income protection or salary continuation cover, and that is a monthly payment, and it's usually 75% of your salary. Yeah, and that monthly payment is paid to you like you would receive your salary paid to you monthly, but it's 75% of that amount, and it gets paid to you after a particular waiting period. And let's just say you can get it paid for 2 years, 5 years, or to age 65. So it just, again, it helps you, and it's any illness or injury, as long as you've got your medical certificate to prove that you're unable to work and return back to work due to this illness or injury, and your life insurance company will pay that monthly benefit. Again, that will help you to pay for your bills, your any medical expenses related to your illness or injury.
Do you think everyone needs a life insurance?
Not everyone, no. Usually it is, it depends on your situation, but if you've got debt and if you've got dependents, then obviously, yes, it is important that you consider having a life insurance policy. However, again, there are so many different variables, and it's important to really speak to a professional to understand, because they will be able to tailor the insurance recommendations to your needs. I had a client the other day, and she was in her 40s, and she had no dependents, no kids, and no partner, and she had also no mortgage, no debt, completely. But she had a $1 million life insurance policy, which was just life. And in that case, obviously, for her, she didn't need it. But for some other people, obviously, it's really important that they consider that cover if it's applicable to them.
What about kids? Do they need life insurance as well?
Well, I suppose that could be part of your adult insurance cover, the ones that I've mentioned. So you could have your child insured as part of your policy. Absolutely.
Let's talk about investments, different types of investments. What are they?
Usually there are 4 different asset classes or types of investments we talk about. First one is probably the most well-known one, is a property. So you can buy physical property, or you can buy units in a property trust. So that's your property investment. Then we also have your shares in a company, listed or unlisted. Shares you can buy on the Australian Stock Exchange, for example, or you can buy international shares. And then we have the third type is your cash or cash-like investments, which is, term deposits, for example. It's still pretty much a cash investment. And then the fourth type is your bonds, which is credit. Similar to, for example, mortgages. When somebody has a mortgage, they obviously borrow money, but they pay their monthly repayments. So a person who lends you money, they invest in a mortgage style investment. So there are 4 different types, and also we have derivatives of each of this investment type. So when we talk about designing an investment portfolio for a client, obviously what's really important is to diversify and to invest not just in one property or just in one company or just in one term deposit. It's really important to diversify and spread your risk. That way you minimize your volatility of the portfolio, but also minimize the some uncertainty around performance, and also you improve your performance going forward as well. So again, to determine what kind of investments you need, we're looking at your time frame, you're looking at your amount you've got to invest, and a lot of other different criteria. So therefore, again, when we talk to our clients about their individual investment portfolios, they are all tailored, and they are provided to their personal circumstances and needs, and that's all linked to their goals. What do they actually want to achieve in life? Why are they investing in the first place? So you can't just sort of kind of say, look, let's just invest in a company. It has to be linked to a goal, to something that they really want to have in their life, whether that's retiring earlier or whether that's providing for their kids' education, private schooling. So all of those goals we take into account, and then we design a portfolio for them.
The real estate market is a very topical subject. Do you think during the financial crisis it's a good time to buy a property at the moment?
We Australians love property, and I guess it is, again, two different components. You're thinking about your property that you live in, that's your lifestyle asset. Yes, it's your home. It is still an investment on the way. However, it does not provide you with any income. Yeah. And then you're looking at your investment property, for example. That's something that you buy. It could be commercial, could be industrial, could be residential property, or units in the property trust that is listed or unlisted. So you can actually buy property that way, but that is your investment. What it means that it's not just going up or down in value. It actually provides you with some income as well. So when we talk about the right time of investing, it really depends again on what we're trying to achieve. Why do we want to invest money? Is it something just for our future, the 10 or 20 years down the track, or is it for today? Do we need that income, or we can maybe have less income in today's environment and more income in the future? So all of those different questions we need to ask ourselves first. But in terms of when is the right time to invest, it's there is an expression saying yesterday. So it's always it depends on so many different things.
What are the steps in purchasing a house?
Wonderful. That's a great question. And it's really important that we take it seriously, because your home or any other investment property, it's quite a large transaction, isn't it? So, and it does usually involve getting credit, getting a home loan or investment loan from a bank. So we don't take it lightly. So we do really need to think about steps. How do we actually do it? So the first one, obviously, is trying to ask ourselves those questions. Why do we want to invest? What is it going to provide us with? Is it for our long-term future, for generating wealth, or is it for income that we need, or is it for something else? For example, a lot of my clients now think about purchasing properties for their children, because it's getting harder and harder for kids these days to buy property. So when we understand our goals, what do we actually want to achieve? It's really important to understand our serviceability. If we are to buy something, how much it's going to cost us to service the loan. If we are going to receive income from the property, which is your rental income, which is great, and currently it is, most properties are positively geared, because rental income usually covers the actual mortgage repayments, which is great. However, what about maybe in 10 years' time? What if the rates are going up? That is not going to be the case, maybe. We don't know, obviously. So going back to that question, how much is it going to cost me to service the loan, and how much can I borrow? So I would definitely suggest going and getting a pre-approval done, going to a bank, or having, a look online. There are a lot of tools online where you can choose maybe your preferred property, how much it's going to cost you, add stamp duty on top, and calculate your repayments, calculate your loan amount, and then go and actually get the final pre-approval from the lender to see if you are able to borrow, and only then start looking for a property, going to a few different auctions, inspections, when we're out of this situation, I suppose. Even now, we can still do it virtually, and trying to understand, obviously, the market, learning a bit about the property market, and then purchasing the property.
Not everyone can get a loan, right? Can you please give us the advice? Any strategy?
To get a loan?
To get a loan, yeah.
Yes, look, actually, last week, I think we've had some good news about the lending situation in Australia, and it looks like the rules and legislation around it will be somewhat sort of reduced, and that will enable people to actually borrow money more easily. So they're trying to simplify those conditions for most of the borrowers. So I guess to go back to your question, how can we actually get a loan? It all comes down to two things. First one is your capital. How much money do you actually currently have? So for example, as a deposit on the house. And the second one is your income that you receive. So if you're a PAYG, if you work for somebody, how steady is your income? Do you receive it every month and it's been going for the last 20 years, and your obviously employment history is fantastic, so that's great? Or do you maybe struggle to hold a job, and then obviously the lenders will look at it. They will look at your serviceability and assess whether you are what kind of credit candidate you are. So they do look at those things. So how much money you've got, and also how much money you receive as income, but also your expenses. They look at that too. They look at how much money you spend every month, and whether you've got a deficit at the end of the day, or do you actually have a surplus? Do you have any ability to save money, and all of those things? So it's really important to, I guess, have a really good, clear credit history. So, people sometimes get into some trouble, maybe if we haven't paid a bill, for a number of months, and then, occasionally what happens, it goes against our credit history. And the banks look at that too. In this environment, obviously, all the data is shared between organisations, and they've got quite a bit of information on each of us. So it's important we have really good credit history. We've got really good serviceability, meaning ability to service the loan. And we've got obviously savings pattern, we've got money in the bank to pay for the deposit. And usually, we're looking at 20%. If we've got 20% as a deposit, and that includes having a stamp duty on the house, then obviously what it means that the banks will only need to lend us 80%, and they love that. It means that you don't have to pay a lender's mortgage insurance, and it's just your rates are lower as well. So, it's important to have those things ticked.
Do they look at how many dependent kids do you have?
That's a really good note. Yes, absolutely. They do look at that too. They pretty much look at everything. And that's why I think it's been harder and harder. Every year it's been getting harder and harder to get a loan, because obviously they try to minimise risk that they would be potentially exposed to.
What is the criteria to get the first buyer's grant?
Okay, so first of all, it's you have to be over 18. Secondly, and it varies in different states. But in Victoria, for example, one of the main conditions is that you or your spouse, your partner, one of the conditions is that you never purchased a property in the past, or you've never had any...
in Australia? Does it mean in Australia?
That's a very good point. I believe so, yes.
Mm.
So that's the main one, obviously. And so if you've never purchased a property, or you're with someone who's never purchased a property, and you haven't purchased either, so that's one of the most important criteria. And then obviously you are an Australian resident and Australian citizen as well. I believe so.
Do they look at the age?
No.
For example, what if you are 50 years old?
No. Well, I guess you can certainly purchase a property and qualify for the first home owners grant. However, if you're thinking about borrowing money, that's a different story. The older you get, the harder it is. So, but again, it depends on your situation. If, for example, you are older, but you've got a really good exit strategy, exit meaning that you've got the funds to pay off the loan if you're no longer working, or if you're no longer around, obviously. So all of those things. So it's the exit strategy. So the banks really look at that, and yeah, they will lend you if you qualify for. They tick all the boxes.
Thank you. On your website, thetruewealthadvice.com.au, I've seen the info that you help single moms.
Absolutely. When we talk about obviously financial situation, anyone's financial situation, we're all different, but I'm really truly passionate about helping single women, because I believe sometimes we're disadvantaged by having taken time off work when we raise children. So we kind of start with a lower, for example, superannuation balances, or our income, ability to earn income reduces, as well as if we take time off and we are on maternity leave, for example, and then we've got the second child and we stay on maternity leave and then return back to work part-time. So it's sort of, sometimes it's really reduces our ability to earn a higher income. Therefore, we truly try to actually help single women to to get a better outcome in their life. And it all comes down to simple financial strategies: earning money, saving money, investing money, and having a good strategy in place in terms of insurance strategy. What if something happened to you? Like having insurance policy in place, all of those things. So if you've got those four covered, it is highly likely that we will come and retire with much more money than others that don't have any, they don't spend time or then just unable to actually seek financial advice.
How do you think to save money with low income?
I think
I know it's hard.
income, it's actually interestingly, again, through my work with a lot of clients over the years, it's not about how much money you actually make, it's about how much money you keep. So it's all about spending habits, it's all about understanding what you can actually save. And a good rule of thumb is saving 20% of your salary or of your income that you receive and investing that money. Again, saving is not enough. Currently, if we save money and put in a cash account, it's not paying us any interest. So it's really important that we've got an investment strategy in place. And superannuation could be your investment strategy. It does not have to be in your personal name. So it's all about just really trying to understand what do I actually want to do? What are my goals? How much money do I need for each goal? What am I saving? Am I a good saver? If not, let's have a look. Maybe we can help to go through the budget and understand where I can cut costs, where I can improve my money mindset. Sometimes, we've got a lot of women come to us with impulsive buying. It's important to look at your money mindset first and try to understand what holds you back, what makes you, what prevents you from achieving your goals. And it could be simple as just really channeling some of your salary to a different bank account every month, so you don't even see it, but it's for saving, and that really helps with a lot of our clients. So saving, investing, and doing really just asking questions and doing your research. A lot of our women, they're fantastic at actually, they know a lot of strategies, but they're just not really sure what to do. They come to us and say, look, I know it all, but I kind of really don't. And maybe you can help me just to understand what's the best strategy for me to go with, because it's just so much information and I don't have the confidence. And unfortunately, we women are perfectionists, we love everything to be perfect, but it don't have to be perfect to start investing or start sort of, thinking about your retirement. It's just all about getting it done and trial and error. And sometimes, yes, we'll make mistakes, but that's okay too. As long as we're learning on those mistakes and as long as we are actually doing it consistently. So we're consistently saving, consistently investing, consistently, asking questions, learning about all the different types of superannuation funds or insurance policies. And that's how we're going to get to where we want to be.
Can you please recommend any good resources to read to be financially educated?
Absolutely.
Maybe, or websites to look through?
Yes, look, I guess there are a lot of government websites. I've recommended last time we spoke, it was moneysmart.gov.au. It's a great starting point. It's fantastic. We spoke about lots of forums, lots of like Barefoot Investor, Facebook groups. They are a good starting point. And I guess I certainly recommend always thinking about, if you're reading any blog, or if you read any article, you Google the topic, always try to understand who's behind the article, who is it written by, and what is their, I suppose, what are they trying to achieve? So if it is coming from an industry super fund, again, so obviously they would like you to invest money in the industry super fund. So if it's coming from a financial advisor, all of those different, sometimes they could be quite conflicted, could be conflicted information. So it is quite a bit to navigate through, and sometimes we only have maybe a limited amount of information. So I would definitely recommend to do more reading, to do your research, and to speak to professionals, because they're the ones that they do it every day, and they will tailor their advice to you based on your circumstances. So it's never good to get one size fits all approach, because it's not for everyone. And I would certainly recommend seeking proper financial advice.
Okay, Natallia, thank you so much for your time. It was very nice to see you again.
Wonderful. I hope it was helpful, and if you've got any other questions, let me know. Obviously, as I've mentioned before, this advice is of a general nature, and it all based on each individual circumstances. So before I can actually provide any more information, I need to speak to somebody one-on-one. But hopefully even this just kind of maybe help to think about some areas that could improve, or they can maybe get more information on.
Okay, thank you.
Thank
and
you.
see you next time.
See you next time. Bye.